Welcome to Spark Your Finance, your ultimate guide to mastering the stock market and growing your wealth through savvy investments. Are you ready to learn the basics of investing in stocks and unlocking the potential for financial freedom? On this channel, we break down complex financial concepts into easy-to-understand lessons that empower you to make informed investment decisions. Whether you're a beginner looking to dip your toes into the world of stocks or a seasoned investor seeking to refine your strategies, Spark Your Finance is here to help. Join us as we explore the fundamentals of stock market investing, share expert insights, and provide practical tips to help you navigate the ever-changing landscape of the financial markets. Don't forget to hit that subscribe button, like, share, and comment to become part of our community and stay updated on the latest content from Spark Your Finance. Get ready to embark on an exciting journey toward financial independence and wealth accumulation through the power of stock market investing. Let's ignite your path to success together, right here on Spark Your Finance. When you invest in a stock, you're hoping the company grows and performs well over time. That's how you end up making money. One of the best ways for beginners to learn how to invest in stocks is to put money in an online investment account and purchase stocks from there. You don't have to have a lot of money to start investing. Many brokerages allow you to open an account with $0, and then you just have to purchase stock. Some brokers also offer paper trading, which lets you learn how to buy and sell with stock market simulators before you invest any real money. How to invest in stocks in 6 steps. To invest in stocks, open an online brokerage account, add money to the account, and purchase stocks or stock-based funds from there. You can also invest in stocks through a robo-advisor or a financial advisor. If you're ready to invest in stocks yourself, this 6-step process may help you get started. 1. Decide how you want to invest in the stock market. There are several ways to approach stock investing. Choose the option below that best how hands-on you'd like to be. A. I'd like to choose stocks and stock funds on my own. Keep reading. This article breaks down how to choose the right account for your needs and how to compare stock investments. B. I'd like an expert to manage the process for me. You may be a good candidate for a robo-advisor, a service that invests your money for you for a small fee. Virtually all of the major brokerage firms and many independent advisors offer these services. C. I'd like to start investing in my workplace 401k. This is one of the most common ways for beginners to start investing. This may be a great option for most people who have access to an employer-sponsored 401k because many plans offer a match. Employer matches are basically free money. If your employer offers a 4% match and you make $100,000 a year, if you contribute $4,000 to your 401k, so will your employer. That means you get $4,000 for free. 2. Choose an investment account. Once you know how you want to invest, you're ready to shop for an investment account, also known as a brokerage account. There are several types of investment accounts, and it's a good idea to figure out which account is right for you. For example, a Roth IRA comes with significant tax benefits while a standard brokerage account does not. For those who would like a little help, opening an investment account through a robo-advisor is a sensible option. We break down both processes below. Keep in mind that an investment account is just an account, it's not an investment. You have to add money to it and then purchase investments from there to have your money grow in value. The DIY option, opening an investment account. An online investment account likely offers your quickest and least expensive path to buying stocks, funds, and a variety of other investments. With a broker, you can open an individual retirement account, also known as an IRA, or you can open a taxable brokerage account if you're already saving adequately for retirement in an employer 401k or other plan. The passive option, opening a robo-advisor account. A robo-advisor offers the benefits of stock investing but doesn't require its owner to do the legwork required to pick individual investments. Robo-advisor services provide complete investment management. These companies will ask you about your investing goals during the onboarding process and then build you a portfolio designed to achieve those aims. This may sound expensive, but the management fees here are generally a fraction of the cost of what a human investment manager would charge. Most robo-advisors charge about 0.25% of your account balance. And yes, you can also get an IRA at a robo-advisor if you wish. If you choose to open an account at a robo-advisor, you probably don't need to read further in this article. The rest is just for those DIY types. 3. Learn the difference between investing in stocks and funds. Going the DIY route? Don't worry. Stock investing doesn't have to be complicated. For most people, stock market investing means choosing among these 2 investment types. Stock mutual funds or exchange-traded funds. Mutual funds let you purchase small pieces of many different stocks in a single transaction. Index funds and ETFs are a kind of mutual fund that tracks an index. For example, an S&P 500 fund replicates that index by buying the stock of the companies in it. When you invest in a fund, you also own small pieces of each of those companies. You can put several funds together to build a diversified portfolio. Note that stock mutual funds are also sometimes called equity mutual funds. Individual stocks. If you're after a specific company, you can buy a single share or a few shares as a way to dip your toe into the stock trading waters. Building a diversified portfolio out of many individual stocks is possible, but it takes a significant investment and research. If you go this route, remember that individual stocks will have ups and downs. If you research a company and choose to invest in it, think about why you picked that company in the first place if jitters start to set in on a down day. 4. Set a budget for your stock market investment. New investors often have two questions in this step of the process. How much money do I need to start investing in stocks? The amount of money you need to buy an individual stock depends on how expensive the shares are. Share prices can range from just a few dollars to a few $1,000s. Some brokerages allow you to invest with fractional shares. Simply put, you can choose a dollar amount and invest that even though the share price might be greater than what you have, which means you can owe a fraction of a stock. If you want mutual funds and have a small budget, an exchange-traded fund, ETF, may be your best bet. Mutual funds often have minimums of $1,000 or more, but ETFs trade like a stock, which means you purchase them for a share price, in some cases, less than $100. How much money should I invest in stocks? If you're investing through funds, have we mentioned this is the preference of most financial advisors? You can allocate a fairly large portion of your portfolio towards stock funds, especially if you have a long time horizon. A 30-year-old investing for retirement might have 80% of their portfolio in stock funds, the rest would be in bond funds. Individual stocks are another story. A general rule of thumb is to keep these to a small portion of your investment portfolio. 5. Focus on investing for the long term. Stock market investments have proven to be one of the best ways to grow long-term wealth. Over several decades, the average stock market return is about 10% per year. However, remember that's just an average across the entire market. Some years will be up, some down, and individual stocks will vary in their returns. For long-term investors, the stock market is a good investment no matter what's happening day to day or year to year. It's that long-term average they're looking for. 6. Manage your stock portfolio. While fretting over daily fluctuations won't do much for your portfolio's health, or your own, there will of course be times when you'll need to check in on your stocks or other investments. If you follow the steps above to buy mutual funds and individual stocks over time, you'll want to revisit your portfolio a few times a year to make sure it's still in line with your investment goals. A few things to consider. If you're approaching retirement, you may want to move some of your stock investments over to more conservative fixed income investments. If your portfolio is too heavily weighted in one sector or industry, consider buying stocks or funds in a different sector to build more diversification. Best stocks for beginners. The process of picking stocks can be overwhelming, especially for beginners. After all, there are thousands of stocks listed on the major U.S. exchanges. Stock investing is filled with intricate strategies and approaches, yet some of the most successful investors have done little more than stick with stock market basics. Thank you for tuning in to Spark Your Finance, your trusted source for mastering the fundamentals of stock market investing and building your wealth through strategic investments. We hope you've gained valuable insights and confidence to take charge of your financial future. To stay updated on all our latest content and continue your journey to financial success, don't forget to hit that subscribe button and turn on notifications. If you found this video helpful, please show your support by giving it a thumbs up, sharing it with your friends and family, and leaving a comment below with your thoughts and questions. Remember, the path to wealth creation begins with education and informed decision making. Keep sparking your finances with us, and let's navigate the stock market together toward greater financial prosperity. From all of us at Spark Your Finance, thank you for watching, and we look forward to seeing you in our next video.